Morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 21st of September. My name is Russell. I'm a senior market specialist at FXCM. My email address r@fxcm.com. Just going to bring up our disclaimers. First will be the high risk investment warning. Just want to double check. Can you guys hear me? Just want to get the sound check. Or hey, Anna, good morning. Can you hear me? Okay, cool. Thanks. All right. Awesome, thanks. Thanks, guys. Let's bring up the market commentaries disclaimer. And just our references, MarketScope, TradingView, and Bloomberg. I'll just bring up TradingView while I go through the email. So the first headline reads, "Eyes on the Fed." The Federal Reserve will probably hike by 75 basis points on Wednesday, and there is a 100 basis point move, which can't be ruled out, but it looks like it's going to be 75. Risk assets were already having a rough session in Asia amid the dollar strength before the pivotal FOMC event, and cryptocurrency investors wait with bated breath. We're going to do the crypto minute at the top of the hour. Strategists are now looking beyond the key issue of inflation for other potential market metrics that may cause the Federal Reserve to slow its aggressive cycle of interest rate hikes. Meanwhile, a brutal wipeout in a 25 billion bond exchange traded fund has the investors wagering that the worst is over. European Central Bank President Christine Lagarde said borrowing costs will rise more in the months ahead, even after officials front-loaded initial moves in what she called the fastest change in rates in our history. Lagarde said in a speech Tuesday evening in Frankfurt that we expect to raise interest rates further over the next several meetings, while ECB officials agree that further action is needed to wrest control of record inflation. There's some discord over what level of aggression is appropriate as soaring energy costs tip Europe towards a recession. Upping the stakes, the Kremlin is moving hastily to stage sham votes on annexing the regions in Ukraine. Its forces still control after Kiev's military drove Russian troops from large areas of territory taken in their seven-month-old invasion. The so-called Donetsk and Luhansk People's Republics, as well as the Kherson and Zaporizhia regions, I beg your pardon, announced they will hold their votes between September 23rd and 27th. It's just a farce. Ukraine and its allies have denounced the referendums as illegal. The move threatens to escalate the bloody conflict even further, potentially giving President Vladimir Putin the formal legal basis to use nuclear weapons. And just on this note, there has been an escalation this morning. So Putin, I think, in a televised statement, has radically escalated. So there's some citizens that have been mobilized, and he stated they were looking to liberate Donbass. And in fact, if you take a look at, I'll just put on the euro US dollar here, because there's an obvious reaction in the euro. It's really moving at the moment. I'll just put on the 1 hour. So you can see this is the reaction here. All right, the next headline, more bailouts. The German government is planning to inject about 8 billion euros into Uniper as part of a historic agreement to nationalize the gas giant and stable for collapse of the country's energy sector. Berlin will also buy the shares of its main shareholder, Finland's Fortum Oyj. Meanwhile, Germany's bailout of Uniper is unlikely to be Europe's last energy sector rescue amid the crisis sparked by Russia's war in Ukraine. European shares may face tough trading following Asian stocks that slipped on Wednesday as investors position for a hefty interest rate hike from the hawkish Federal Reserve. I would suggest the announcement from Russia is adding to the risk-off sentiment. The Netherlands is to announce consumer confidence data for July and Sweden to publish unemployment rate statistics. Sweden and Germany are selling bonds. And let's do some analysis here. Very tough day on the market. So, all right. Let's bring up market scope, and here's the hourly. All right, so I told you guys yesterday I was looking to re-enter a short position here. So the entry was given. All right. So I do have this short position on at the moment. So this was the euro US dollar. Let's just run through the methodology here, because I'm cognizant of the crypto mint in the next few minutes. So looking at the weekly, we've got the primary trend is down. I want to focus in on the primary trend here. Okay, the primary trend here is looking to make another lower peak. Now, it's only the middle of the week. I don't know where this candle is going to end. Okay, so I'm focusing very much on this candle over here. What I'm looking for is I'm looking to see if it closes below the low of last week, and that's this green horizontal here. That's effectively the signal that we can take the question mark out of LP, so it becomes then lower peak. So then once we get that lower peak, we have a platform for a swing, right? And that's kind of where we want to be active on those impulses. So the euro looking quite fragile here, despite the hawkish comments coming out of the ECB. I don't know if we're going to get a price closing below the green horizontal. I suspect we will, but whatever I suspect and whatever we get are two different things, right? So we've got an escalation in the geopolitics coming out of Russia's invasion of Ukraine, but we've also got the prospects of a very hawkish Federal Reserve, and I think those are effectively what's driving the market. US dollar, even its safe haven status at the moment, must be seen as favorable, just given the uncertainties out there. And look at the weekly momentum. So we've talked about this before. It remains in that lower quintile, and as long as it stays below 20, the pressure's on for the euro against the US dollar. And of course, what's interesting is the daily chart here, because when we looked at this yesterday, so 24 hours ago, we didn't have a red candle yesterday. We actually had a blue candle, and not only did we have a blue candle, it was threatening to go into zone 1. Well, that's changed up now. Look how it's sold off, okay, as we headed into the FOMC announcement. And now with the escalation by Russia, look how it's reacted even further. We've now dropped what it was potentially going zone 1. Now it's zone 3. All right, take a look at the Bollingers here. See those Bollingers, the squeeze? Take a look at the stochastic. See how it's rolled over. The stochastic yesterday was actually starting to hook upwards. That's disappeared. In fact, it's pushed down, right? Okay, it was being pushed down. And was there a webinar yesterday? Yeah. Was there? Confusing me. Yeah, I think there was. It's on the Telegram. That's odd, Anna. Just take a look in your spam folder and see if it went into the spam. I didn't receive. Take a look at the Bollinger's, the squeeze here. See, here's the squeeze. Now take a look at the Bollinger's. Okay, what's happening to the Bollinger's here? Top Bollinger starting to push up. Bottom Bollinger starting to push down. You see the ebb and flow, so to speak, of volatility. So what we see here is the cyclicality of volatility. So there is a theory that price tends to move in cycles. So cycle analysis is very much sort of a part of technical analysis. Of course, there's adherence to price cycles, and whilst I myself would say that there is an element of cyclicality in prices, it's very, very difficult to get any recurring pattern or any sort of method to actually use that appropriately, in my opinion. However, I would also acknowledge there are some price analysts, price cycle analysts out there who actually do have a really good reputation. I can't remember the person's name. I have mentioned him previously, but I saw a presentation of one chap in particular. It was very, very impressive, but he had a proprietary system, so nobody knows what he's broken it down into. That's not the case with volatility. It's not the case with volatility. Volatility, the cycles are apparent. It still doesn't make timing particularly easy, all right? But you can see the Bollinger's squeeze, expand, squeeze, expand, squeeze, expand. Well, we've just gone into a squeeze, and now we're getting to a point where it's like it may be expanding. So the cyclical nature of volatility, something which I think is very useful for traders. So as long as we stay in zone 3, as long as we see those Bollingers expanding, and as long as the stochastic rolls over and heads towards 20, euro is looking very, very fragile. And if you go through to the hourly chart, it's very difficult to actually decide what to do with euro this morning. The movement, the signal was given yesterday, okay, but there is new fundamentals. There's new fundamentals that are out. What's the new fundamentals? Escalation in the war. I'm not sure how that's going to drive prices. I think that there is a certain fear around that, and I think that fear is, valid, because this guy is a crazy guy. So I don't know how long the stochastic stays under 20. Okay. Don't know how long, but with this new development in terms of the news flow, we probably do have a potential of staying below 20 for a fair amount of time. So as long as we stay below 20, the pressure is going to be on. The swing is going to be on, and you'll see when we talk about momentum. So the day trading course is we kind of introducing a momentum aspect to it. There's obviously very many ways to approach day trading, but in my research, the whole thing, well, what is momentum? And it's actually a very interesting question, because when you come down to it, momentum requires two things, because it's what's called a vector. It needs what's called magnitude. So in this case, magnitude would be the distance. Okay, so the longer the stochastic stays below 20, the greater the potential for a meaningful distance. And then the second thing that you need for momentum is direction. So you've got magnitude and direction, and those two things are encapsulated in the stochastic, which again makes it such a cool indicator. So how direction encapsulated? Well, if it's stuck in the lower quintile, direction's down. The longer it stays in the lower quintile, then you get magnitude, right? Take a look at it. If you look at it in terms of the 80, well, that is direction, but to the upside. The longer it stays above 80, then we start talking about magnitude. So the stochastic, to me, is really a terrific indicator, especially when we look at momentum approaches to the market. I guess the idea here is then, what's the magnitude? What kind of magnitude do we get on euro, given the news flow this morning? Just one other thing, and then we'll go through to the cryptos. I just want to take a look at the US dollar Canadian, because that was something we spoke about yesterday as well. And you can see magnitude and direction over here, can't you? And this is momentum. This is what momentum, the momentum approach is all about. So on that note, I think we conclude. I'm going to go through to the crypto minute. So please join me for that, and we'll continue our discussion, specifically looking at the crypto market. Thanks very much, guys.